Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, I hope you enjoyed the long weekend. Once again, we're starting this week off with a big bid. We're continuing to see the markets move higher into this pattern. A lot of characteristics that I've been talking about over the last several videos continue to exist as the market basically just climbs this wall of worry and a very low momentum and very mixed picture. And I'll go through all the details in the technicals here in a few minutes. But as we go to our database, we're continuing to see expansion both on the short term and the intermediate. So the markets are still getting traction and still indicating that we're likely to go higher in this pattern before the end is here. Where that is, we'll find out eventually. As we look back on last week, for the most part, we saw a big rally on Monday and then sideways choppy throughout the week. We really just kind of ground higher in that sideways range with a slight upward bias. We did see a lot of earnings come out, and we will continue to see plenty of earnings come out over the next 2 weeks. There's over 1,400 releases yet in this earnings season, 615 of them this week. So we're going to have plenty to focus on from an earnings standpoint. As we look at this week from an economic viewpoint, probably the big day is going to be Wednesday. The FOMC meeting minutes will be released. Maybe there'll be something in there, but we're really just seeing this rhetoric around the markets just continue. As we know, last week we saw Janet Yellen out cheerleading, telling you that we'll be at full employment by 2022. Everything's going to be wonderful. And this is exactly what I've been talking to you about for a while. But going back to the economics this week, we will have PPI coming out, claims on Thursday looking at 780 plus. Continuing claims came in at 4.49 million last week. These just aren't good metrics, but the markets are looking at them as good. As I mentioned a few minutes ago in earnings, we're continuing to see the earnings come in around 82–84% of the earnings reports are coming in better than expected. So there's this underlying bid is likely to continue this week. We'll see if there's anything that comes out as we go through this week that could derail this upward trend, but for the moment it doesn't look like that's very likely. Let's go ahead and take a look at the charts, see how they're setting up for this week. As we begin the review of the database, the output on Friday for the weekly models did have a slight bid that came out. We now have 13,955 symbols long, 84.83%. As I mentioned in last week's video, we do have 4 sectors that are getting long in the tooth. Those are consumer non-cyclical, basic materials, consumer cyclical, and conglomerates. The financial, capital goods, utilities, and et cetera, as we look at this list, are early in their cycle, and I continue to suggest to look for opportunities in those areas as this database still is rotating, and this is where the evolution and the higher prices are likely to be driven from these secondary sectors, not the leading sectors that I just mentioned. You'll see there was roughly 1,100 new buys, about 300 sells. The 1.2 model is in a very bullish cycle, but 3.2 is actually in a slightly negative cycle where we saw more sells than buys there. But the weekly, as I mentioned, had a slight positive rotation. We had 300 new buys with 120 sells, both positive on the 3.2 and a bullish ratio on the weekly 1.2. So we're seeing this rotation continuing. I've mentioned this over the last several weeks. We went from a 72% bullish down to 27, and now we're back at 51%. And all this tells us is that we're in sustainable mode. Now, I have seen some comments on the channel that people think I wasn't telling you that you couldn't buy the market until it got above 42. No, that's not what I'm saying. This database actually gives us a feel for the probabilities for it to go through a cycle, and the typical cycle on the short-term models is around 40 days, but it can refresh during that cycle. So sometimes it can last as long as 90, even 120 days. As we see trades come off and new trades come on, these metrics will change slightly, therefore indicating that there's going to be a continuation in the pattern. And that's basically what we're seeing right now, is this grinding forward in the market is being substantiated and confirmed by the rotation in the database. As we look at the S&P futures, I actually have the chart turned back to a year ago. This is February as we're coming into that upward wedge. As I've been talking about, we're coming into this anniversary date right here around 215 to 221, and we're seeing very similar numbers in the ppms and in the structure, and I'll show you this a little bit more in detail tonight. But we're seeing on 214 last year, we're looking at the market grid being in a very narrow range, markets climbing a slight upward trend. The ppm was 0.38 then, and we started to see some crossovers on ppm 1 and 2. Now, we haven't seen this in the current market. As I go to the current market, you'll see right now the ppm 2 was 0.48. Now it's almost exactly, it's at 0.34. But the difference is that ppm 2 is still expanding. So that tells us we could go along this line. I think we still have several more sessions before we're going to hit this apex point where the market might even have, a 3-5% correction. At the moment, that doesn't appear to be what's happening. Let's go and take a look at the SPX. As we look at the market grid for today, you can see that R1 is 29.43. Right now, the futures are up. There's actually been two sessions, Sunday and Monday session, and we're up about 25, 27 handles at the moment as the futures are trading up at 39.52. So this suggests that we are going to trade into this R2 level tomorrow. So likely we're going to see an S1 39.25. R2 would be the most likely target, especially with, you see that the ppm 1 is expanding on cash, but that's going to downtick just as I showed you a minute ago in the futures. So we'll see some of that downtick, but the ppm 2 continues to be very powerful, as I've been talking about for a while, and is the 10-period moving average 38.77 right now. This is going to continue to move higher by about 20 handles a day, so that's 38.99. And I talked to you about this in detail, that 3,900 level was going to be key. A close under 3,900 would cause a bit of an issue on the cash. It doesn't look likely at the moment, as all of these ppms are in trend mode and continuing to drive this market in this upward slope. Taking a quick look at the weekly chart on SPX, we look at the expectations for this week. R1 is 39.66, and there's a possibility now that we're going to move toward R2 this week, which would be 4,001. So basically challenge the 4,000 handle in this pattern, and that would just be an R2 move. It's a given that we will see an R1 number 39.66, S1 39.03. That's going to be right in that support level that I talked about. So S1, R1 minimum. Most likely we could see an R2 this week up to 4,000. Next market I'll cover is the NASDAQ. NASDAQ also continues to climb up. I'm starting with the weekly chart. The expectations for this week, R1 is 13,961. Most likely we'll see a 14,000 handle here, 14,135. S1, 13,648. You see the ppm still remain in a very robust mode. We have ppm 1 1.16, ppm 2 1.06, and 1.05 on ppm 3. Anything over 0.25 is an uptrend, so we have plenty of support. And it's interesting as we look at the grid, the STX number is 13,142 with the 10-week moving average at 13,175. That is your major support on an intermediate level. Looking at the daily charts, we continue to see this narrowing of the grid, and right now we're seeing a high of 13,900, and R1 is 13,901. So we've had an R1 print. Still think we'll see a little bit more, 13,934 R2. So same as in the S&P futures, and S1 R2 is most likely. You can see the numbers here on the page. If we took out S1, 809 would be the next number. And it looks to me that we'll have this upward bias. Although we are seeing a collapse in ppm1, this is just really telling you that we're going to stay within the grid. We're not likely to see, at least on it for today, an RXT penetration, which is 13,996. That doesn't appear that that's going to happen. But there is a very narrow range, sets up a vulnerability to trigger an RXT sell, but right now it doesn't look like that's very likely. Next market I'll cover is silver. Silver continues to climb in this upward range. The 10-day moving average is significant, 27.19. The low overnight, 27.63. And the high, 28.075. So we have a little bit of a bid in the market, but it's not very robust. We are seeing ppm1, however, slice through its first and second derivative. ppm2 is accelerating, which tells you that we're going to have an upward bias and move toward the upper end of this range between 2807, which we've already printed, which is the R3. RTX would be 2819. I think most of the numbers that we need to pay attention to here on the weekly chart, which continue to suggest a minimum move up to 2876. 28 even is R1, S1 2665. That could be a thing from the standpoint of a test of the support level, which is the 10-period moving average 2623. So that move down toward S1 would represent somewhat of a test if we did see that. But we're also seeing on a weekly basis that ppm1 is in a 1.39, so this is an uptrend, telling us there's an upward bias on a weekly chart. We're also seeing ppm2 slice through its second derivative, and that is also positive. So we're looking, like I said, probably an R2 2876, could see 2952 if this thing gets going. The high, that spike high that we had on all the hype was 3035 on an intraday basis. So I don't see that getting challenged, but we definitely can see this R2, R3 number on a weekly hit, and 2665 is going to be rock solid on this market. I don't see us getting below that number. The final market that I'll cover tonight is gold. So we look at the daily gold. The 10-period moving average 1834 is resistance. The high's been 1856 tonight. We traded just above that. As we look at the market grid for today, 1857 is R3. So we printed an R3, S1 1831. So we basically have already had an S1 R3 range so far, and that may be the established range for the session on Monday. But a close above the 1834 level would be positive, especially with ppm1 penetrating through its first, second derivative, ppm2 starting to show some upward momentum as well. We could start to move toward that 1865 number that I discussed in the last several videos. As we look at the weekly chart, this is where all of the resistance is set up from my viewpoint. We still have negative ppms on a weekly, so we're not quite set to break out above the 21 and 40 week moving averages, which are between 1872 to 1876. A break over that level would be significant, but it does look like maybe an R2, R3 number is going to be the most likely high end of the range. That R3 would put us just above that 1865 level at 1870. On the downside, 1808 is absolutely rock solid bottom. Right now, that's going to be the number really to watch. We were unable to get any follow through from 2 weeks ago when we saw that sharp sell-off. The markets just went into the sideways range. As I've been saying for a number of weeks, I still see gold as setting up a bullish pattern and the possibilities of starting to move higher. And it's going to take at least another 2, maybe 3 weeks to set this pattern up unless we can get some sort of move and get a break above that 1870 on a weekly basis. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night.